Hey, today is Thursday, April the 2nd, and again we're seeing low volume. We saw the Dow take off, pull back at 11 o'clock, resume at 2 o'clock, only to fall back below its high of 11 o'clock. Same with the NASDAQ, same with the S&P 500. Lots of green on the charts. Advancers to decliners 2 to 1 when we look at the stock market breadth. It was at the neutral line, so it was pretty fair to say 50% that it would go one direction, 50% in the other direction. Now what we're looking for is if we do have another pop tomorrow, we're looking to see if tomorrow and Monday we can get a higher high in the McClellan index to show that there's some momentum being built up of money coming back into the market. But remember, it's so hard to say nowadays with so much of the volume being controlled by computers and algorithms, and it's not people trading anymore. So you've got to take a lot of these indicators, all of them now, with a grain of salt. They help, but they're not as reliable as they used to be. Advancers to decliners was not quite 2 to 1 on the New York Stock Exchange, but look at the volume. The volume in millions of dollars was not quite 2 to 1, but pretty significant for the advancers. That doesn't do a lot for our summation index. Summation index actually pretty much didn't move. So I'm going to show you the volume now, which we've been starting to look at. And the volume and the up volume was better than it was on Monday and Tuesday. And the down volume was better than it was on Monday. So this is a positive indicator now. We've seen this is the first good up volume we've seen since middle of last week. So let's keep an eye on that. But our scenario is still, in my opinion, playing out where we're looking still for a double bottom and still looking for it to fall back into this region. And at this point, I would say get support on the gap. We may not fill the gap, but if we don't get support on the gap, then we are going to go down and test 2200. The volatility index dropped a little bit more today. Apple was up 289 after market and in market, but you can see the good thing is that it finished up near the high end of its range, and it came down and it found the gap and it bounced off of the gap. So if that happens for the S&P, that would mean the S&P may find its gap and may bounce off of the gap. So Apple, but look at the volume. Declining volume in Apple. Our real estate investment trust popped today, 5% and 7%. The CEO of AGNC released a very helpful press release at the close yesterday after market close, showing just how well positioned they are and reassuring people that the Fed is there to buy their mortgages. So that was actually after Tuesday's close, and we didn't see much happen on Wednesday, but it did percolate down today, and that's a pretty nice pop. Caterpillar is showing surprising strength, but look at where we saw the resistance. We saw the 50 EMA and the top of the gap at exactly the same point, and of course sellers were waiting there. When you get coincidences like that, two things happening in the same place, you can pretty much be assured that that's going to be a point of resistance or support. Disney was up 1.24%, and if you want to buy Disney for its dividend and for its ability to bounce back if and when families feel safe about spending $1,500 for a day by the time you buy your tickets and your meals, and that's not including hotel and airfare. Then Disney would be the stock to invest in. I will not. Coca-Cola up 4% today. That's pretty nice. Anything above the 38.2% should be an opportunity to buy into this stock. AT&T up 2.3%. And it's gotten support now for 2 days off of this green line. Remember, we're drawing the green lines on our weekly chart where we see long-term areas of support and resistance. And this certainly qualified as one. And we saw the bounce this week but on a daily basis now we've seen the bounce for 2 days. Home Depot is up over 180 again, up just a little under 2%, but finding resistance at the 38.2. It's still a great stock. I'm still glad that I've got short covers for all of them at 180, 185, 190, and 205. I'm very happy with that. Whirlpool up 2.3%. Still, this is what you would call a classic bear flag, which should break in the direction of the flag. So it should break down. But given, that the market is the stock is so oversold, the market isn't oversold, but we're seeing the stochastic momentum indicators that it's bottomed out on the slow moving indicator. So it's probably going to go up. And on the faster moving indicator, it's already moving in that direction. So where are we headed tomorrow? Let's take a look at the McClellan Index for a clue. Look at the last time we were above the median line. We churned and we never really made a stronger move up. We had these three peaks right here, which we found out later were a sign that the bears were in charge, that they were keeping the momentum down by preventing the oscillator from moving to new highs. Let's watch for the same thing this time. I still feel that we're going for a double bottom, so tomorrow may be just a flat day, but I would look for next week as having some days below the zero line, possibly going into the oversold area when the S&P comes down into what I'm calling the hot zone, or the zone where we're going to prove that there is definitely long-term support for a good double bottom here.